Welcome to Serious Business. Today we'll talk about economic growth forever. What is economic growth? It's the increase in GDP over time adjusted for inflation. GDP is the total value of all goods and services exchanged in a country over a specific period of time. So this is basically every change of hands of money or goods and services is recorded and added up. So every point where value is added in a supply chain and so on are part of the GDP. Negative growth or contraction and lack of growth are seen as a failure of economic and monetary policy. So when you hear about a recession, which we're currently going into it seems, we talk about negative growth, which really means a shrinking of the GDP number, and lack of growth is something that people have said is a sign of Japan's failure of their economy by just having a very stable but slow growing GDP. The inflation adjustment comes with a huge caveat since CPI inflation numbers are heavily manipulated. If you want to know more about the CPI inflation numbers, I'll probably be making a video on it, but basically they change the measurement of what is inflating in order to make the inflation number look a bit better so that they aren't, you know, voted out for their bad economic policy. Today on You've Been Fooled, GDP doesn't matter as much as quality of life. As you can see in this cheesy political cartoon, GDP is really not doing anything for either of these two guys, and they're both really worse off than where they started. I know it's pretty satirical, but it proves a point. Growing GDP may be incompatible with improving quality of life. Just infinite growth destroys the resources, destroys the living space that people actually care about, which was kind of the original goal. Technological advancements yield diminishing returns in terms of GDP as the economy gets more efficient. As technology improves, we get little by little steps further in GDP growth, but otherwise the world is finite and infinite growth becomes a zero-sum game. Unless we start expanding to space, which I don't think is really the first option we should be looking at, the infinite growth narrative is going to lead to countries trying to overtake each other as far as economics and as far as just straight up invading each other. Real quick reminder to like, subscribe, and tip. The solution, I think, is that developed countries should lead the way in ditching economic growth in favor of quality of life centered policies. We can see here a chart that takes a different approach to success as far as a company's or a country's policies. So you can see these Nordic countries are very successful. There's a lot of reasons for that, and it might not be what you think. A big reason, at least for Norway, I know, is that they have massive oil reserves and have a sovereign wealth fund, which really helps. And a lot of these other countries are just very sparsely populated, which means there's just more space per person. A balance that maintains GDP per capita or reduces it occasionally in exchange for better quality of life might be a big step forward. And this is really controversial among economists because the narrative in basically all of past history is that GDP growth means a higher quality of life. But a challenge to this idea is the subjectivity of happiness and quality of life. So one problem with this chart I have is that these rankings are based on GDP per capita, or partially based on GDP per capita, so it's not really looking at the full picture still. We still have to have some sort of quantitative metric to compare things by, which makes the quality of life measurement pretty difficult. So I think Bitcoin has a part to play in the solution. Deflationary currency has been treated as a death sentence because it discourages investing and slows economic growth. And like I said in the past, economic growth has been equated to higher quality of life. But under a Bitcoin standard, investments would need to yield positive returns denominated in Bitcoin. So that might be a challenge with assuming we get to the point where Bitcoin is used as a currency it would just have a steadily, slowly increasing buying power. So that means investments must beat the deflation rate, essentially. People would need to be more careful with their investments based on this, which would slow investing and again slow economic growth. But this means further economic efficiency would result in cheaper goods and services, leading to higher quality of life for people who just work hard, save their money, and maybe take the risk of investing to produce more technological innovations. That's all for today. In the future, I have topics like why smart contracts aren't necessary and why dividend stocks I think are a better investment than anything else other than maybe Bitcoin.